watching Business World Live. I'm Dan.
And I'm Jess De Los Santos. Start of a new trading day. Let's go straight to top story. Poultry production is 40% as demand weakened due to the COVID-19 pandemic. Broiler raisers or Obra, the industry has been heavily affected by the crisis as it saw a drastic drop in demand from institutional buyers such as hotels and restaurants whose operations remain limited because of restrictions. Obra President Elias Jose Inchong says hotels and restaurants account for 30% of the market. He says recovery is nowhere in sight as hundreds of fast food outlets closed permanently and more are expected to follow. Inchong says prices have been volatile due to weak demand and oversupply. Bureau of Animal Industry Director Ronnie Domingo said the government has tried to push excess poultry and traditional local markets after strict lockdown measures. Domingo also said increased prices have pushed consumers to buy chicken instead. All right, from agricultural stories here, Dan, are you ready for third quarter earnings to kick off? This index play here. Our earning was a profit plunge for BPI.
All right, so here we go, Jess. Third quarter earnings. First one, big name is, of course, BPI. You're going to be seeing on your screens here. Profit for the third quarter plunging by 34%. That is to the tune of 5.5 billion pesos. That actually brings net income to 17.17 billion pesos. That's down 22% for the first 9 months of the year. Now, the good thing, however, here, Jess, is the net interest income was actually up by close to 12%. So still double digit there when it comes to their core lending. That's up to 54.4 billion pesos. And even their trading gains actually brought up their non-interest income by 5.1% to 23.5 billion pesos. So what is the culprit here? Obviously, and quite expected really, were the provisions. So the loan loss provisions they needed to set aside, of course, anticipating that several of their borrowers may not be able to pay the loans that they had, especially during this pandemic. Those provisions that they've set aside were 21.06 billion pesos. That is more than 4.6 times the provisions that they had set aside in 2019. Another thing is, let's say, the loan growth here. So not necessarily, as stellar as people have been hoping for. That was just up by 0.9%, but nevertheless, still at one. Interesting here that their CFO said, this is of course Maria Teresa Marcial, is that if you took out this loan provisions, the operating profits would have actually increased 22% from 1 year ago. And nevertheless, if you actually take a look at Bloomberg and my terminal here, you can see that the exact same amount was actually what the consensus were looking at. I'll pull out the quarterly for you, but really they were also looking at a 5.5 here. You can see that billion in net income. So it's basically in line with those estimates. Another very interesting part here is you can see on the right side, the analyst coverage. People are still, at least analysts are still bullish on this stock. You can see 14 buys and just 6 holds and no sells for BPI. I'll pull out the chart for you to see how this stock has been performing. I just want to highlight that yesterday it was actually one of the best performers. And you can see that even as it's opening in the red, sliding down by 2.2% ahead of this earnings sprint, it was quite up. It was one of the best performers. And in the past 3 days, it's still up by 11%. Now, Jess, BPI will not be the only one this week, so brace yourself. Tomorrow, we're going to have Metrobank and BDO earnings expected. And next Monday, before the holidays, you're going to be having URC and Meralco. And then after that November 1 holiday, you're going to be seeing everybody else basically reporting their third quarter earnings, Jess.
No, Dan, you should brace yourself for those earnings reports. But moving over to a wider view of the index here, Dan, another strong trading day yesterday. Will we be able to stretch those gains?
Well, look at the gains today. I mean, 6,300 na tayo just finally. We are
Mm-hmm.
up by 0.6%. Does not seem to be shying down since the start of the week. We're already up by 5% in the past 3 days and probably much more than that. Now, what happened yesterday? I'm just going to pull out the chart for you of the net foreign buying so you can see how that there's just this one bright, green figure here after 28 straight days of net foreign selling. So that actually was what investors said kicked off the jump yesterday. We were up by 2.7%. That was closing at a 3-month high. It's the biggest one-day gain since we've seen since June, and of course extends a rally to a third day. But don't rest on your laurels here. Our withdrawals
Mm-hmm.
from the foreigners are still more than $2.2 billion. So that's still more than we've ever seen for any full year on record. Nevertheless, the good news is a lot of trades yesterday. So I'll go back to that chart. But we saw 10 billion pesos, 10.5 billion pesos actually exchanging hands with very strong trades yesterday. And another good thing that analysts are saying led to this rally is the fact that the country posted the lowest number of new COVID-19 cases in 1 month. So the health department actually reported 1,606 new infections on Tuesday. That's the lowest number since September 22. Another thing that we're going to be talking about later on in the broadcast is the Department of Tourism now allowing hotels to operate at
Mm-hmm.
full capacity. So they used to limit them to a skeleton workforce. And in fact, the property space was up by 3.6%. A lot we're saying on the back of this news. So a lot of interesting things, but of course you've got Phil Stocks' Pipertan saying stay cautious because we are waiting pa for those third quarter earnings, and this increase
Mm-hmm.
is still not supported by the quality of earnings. I had already reported one, but we are still watching out for that. Another interesting thing though is that the 57% of all of the index members closed above the 200-day moving average, and this according to Bloomberg analysis is something very, very interesting and quite bullish for the index. Now let's take a quick peek at some specific stocks here and which ones are moving and continuing that trend. You can see a very mixed picture in terms of best performers, with Robinson's Land still up by 3.7%, but everyone from conglomerates to banks to Jollibee is still overperforming. PLDT, however, seems to be paring back those gains. That is down by 3.8%, but that follows it having risen the most in 16 weeks yesterday, and in fact, in 1 year, it was up by close to 18%. So again, a lot of mixed picture here, but nevertheless, generally a bullish sentiment. I want to take a quick peek at the mining and oil counter. This is something that we've been watching, especially as there was so much optimism on that, lifting of the moratorium over in the West Philippine Sea. You can see the mining and oil index actually down a touch. So sitting out this rally of the rest of the index, it's down by 0.3%. You've got PXP Energy down by 2.6%, Apex Mining as well. But this, again, of course, follows a lot of euphoria we've seen here. Another one that I want to watch out for are the nickel miners. And you can see Global Ferro Nickel here in Philex. Actually staging gains, and this according to the Nickel Association, Philippine Nickel Industry Association. Higher global nickel prices will be benefiting the Philippines. Now, why is that? China recently reported that its economy expanded by 4.9% in the third quarter. So very exciting. And get this, 90% of all our total nickel exports goes to China, Jess, and the rest goes to
Mm-hmm.
Japan. So if that happens and their economy is doing well, then that bodes well for
Mm-hmm.
our own nickel. And of course, prices in the global market have also been at an uptrend. You've actually got a couple of names here. So for instance, Dante Bravo of Global Ferro Nickel saying they're still actually constructing a $50 million nickel plant despite the pandemic. You've also got Mark Ventures saying that they're holding talks for potentially expanding the mine. So a lot of interesting things to look at when it comes to the drillers here. And finally, I just want to say, looking at the global level, what to be watching out for today, especially as we look offshore. You can see a sea of red though. A lot of eyes will be on the final presidential debate over in the United States.
Mm-hmm.
That's between, of course, President Donald Trump and Vice President Joe Biden. That's going to be tomorrow. So a lot of exciting things going on, and we'll have more on that later. But you do have some figures of your own in terms of the country's trade recovery. Will that recovery be happening?
Well, if you try to take a look at the figures here, Dan, there is a bit of a recovery here, but it's still pretty much a drag here for the third quarter. But you have the United Nations Conference on Trade and Development, or UNCTAD, reporting that during the third quarter, Philippine exports actually likely fell by as much as 8.7%, even perhaps having the 10th largest drop here globally. In fact, that surpasses the estimated global trade drop of 4.5% year on year for the July to September period. That, of course, is a huge improvement, really, from the 19% plunge that we saw in the second quarter globally. Recall that during the 8 month period from January to August here, Philippine exports actually fell by 16.6% to $39.29 billion. That, of course, is according to the Philippine Statistics Authority. But if it's any consolation, the rest of the world really is having a difficult time when it comes to trade here. Russia is expected to drop by 19% when it comes to exports. Colombia, likewise, is expecting a 13.3% plunge. In fact, only 4 countries of the 30 surveyed economies here showed growth in the third quarter. That includes Vietnam. They are estimated to have a 10.9% growth when it comes to trade. China, likewise, of course, also showing some signs of recovery here at 8.8%. In fact, China is a different case altogether, according to UNCTAD. They're saying, they have already stabilized in the second quarter and rebounded by the third. In fact, the level of Chinese exports in the first 9 months, according to them, is already comparable to 2019 levels. If only we had that as well.
Wow.
But see, globally, UNCTAD is still projecting a full year drop here. They're saying globally, trade is going to fall by as much as 7%, with a lower bound of 9%. That's due primarily to uncertainties as well as as well as the resurgence of cases, chances of deteriorating policy environment, as well as increases in trade restrictive policies.
Okay, Jess, I'll give you some minutes to
Sorry.
catch your breath here.
A few
But
seconds, please.
just zeroing in again on the Philippines, what are our business leaders or authorities really saying about the gloomy trade prospects here? Why are we not going to be the same as China?
Okay, so primarily you have the Trade Department saying it's really primarily due to the length of the lockdown as well as how stringent it is in the country. That exactly is coming from DTI Export Marketing Bureau Director Senen Parlada. Is saying that economies that opened earlier do not have a severe lockdown and do not have actually severe lockdown fared better when it comes to trade. That allowed movement. Transportation is more open. People were able to go to work. Retail sector at the same time is also very much open, as well as there's a faster recovery when it comes to export. At the same time, you have to consider cost of transportation logistics increased as a workforce has to go through redundant quarantine and tests. Especially if you have some staff going from one place to another, you have to go through quarantine, then you have to go through another set of tests. That adds to the time, and not only that, it also adds to the cost. And importers, in fact, may select goods from other countries if Philippine goods are not available. So, these things are really hampering how things are going for the export scenario here in the country.
Okay, well, hoping that changes now that these quarantine restrictions are now eased. Checking in on the biggest headlines, we're keeping our eyes on this Thursday. This year's Philippine Digital Convention, organized by PLDT Enterprise, will move closer to the theme. That's as it proceeds virtually later this month. With the COVID-19 pandemic accelerating the country's need for more tech-driven solutions, this year's DigiCon will be headlined by business influencers, tech experts, and thought leaders from around the world. Around 20,000 delegates are expected to be in attendance to learn from global executives such as Cisco President and CEO Chuck Robbins and Nokia President and CEO Pekka Lundmark. Now, ahead of the launch of the 7th Philippine DigiCon, that's on October 28 to 30, PLDT said it is looking to provide more options for small businesses that are doing everything they can to stay afloat this pandemic.
This digital convention is really all about rediscovering and reinventing businesses. We want to give all businesses the chance to be able to reinvent themselves to something better.
As we continue to battle this pandemic, we're challenged to rethink our current business model. But with thought leaders joining us at this convention, I am hopeful that you will be inspired to take your vision farther and wider.
Fitch Ratings is seeing a pickup in the country's foreign tourist arrivals, but only starting late 2021 to early 2022. Head of Asia Pacific Sovereign Ratings, Stephen Schwartz, says travel will recover gradually next year, but it would mostly be led by domestic tourism. For international travel, a resurgence of the virus remains an important downside risk to the outlook. But local tourist spots like Boracay and the Ilocos region have opened a tourism bubble exclusive to the region. Other areas like Baguio City will even start welcoming visitors from other regions starting October 22nd. And while most travel agencies are eager to jump on easing in movement restrictions, some of them are still waiting for airlines to provide full refunds for canceled flights since March. So while the ban on non-essential travels are now being lifted, the Philippine Travel Agencies Association says travel agencies might still be cautious in resuming operations until demand increases to a point where it can sustain the overhead costs of their operations. And picking up from that report, the hospitality and tourism sector is finally seeing some light at the end of the tunnel. First, of course, non-essential outbound travel has been given the go signal, and now hotels are allowed to operate at 100% capacity. To check on their prospects amid all these developments, we have with us RedDoorz Philippines Country Manager Miguel Capistrano and RedDoorz Philippine Consultant for Hygiene Pass Dr. Renz Guinto. Good morning, gentlemen. Great to have you here with us on the show.
Good morning, sirs.
Okay,
Thank
so
you for
let's
having us.
kick things. All right, so let's kick things off. Miguel, can you give us first an idea what exactly is RedDoorz? How do you set yourself apart? Of course, you have a Southeast Asian presence here as a budget hotel chain. And how did you fare primarily during the pandemic?
So to begin, RedDoorz has been in the Philippines since 2018. We have presence also, as you mentioned, in Indonesia, Singapore, Vietnam. And from 2018, we grew to more than 200 hotels as partners for us to operate their hotels using our technology. Yes, we were affected by the COVID-19 pandemic, same as the other hotels and industries. But we noticed since the easing of lockdown and quarantine travel restrictions, we actually have started seeing growth positively month on month starting August. And
And
sorry,
go ahead, go ahead.
and along with we want to lead also and set our commitment towards helping in the gradual reopening of the travel industry through our Hygiene Pass certification program, which is a program that allows it's an industry-wide cleanliness and sanitation program for not only RedDoorz hotels but also for non-RedDoorz hotels, so that we can help them operate in a safe environment, or not only for their guests but also for their staff. And we believe that as we grow forward towards the new normal and acquiring more hotels, and we actually would like to use this as a way to help the industry recover.
All right. Miguel, I just want to drive on what you said earlier that you did experience a month-on-month increase here. What's driving that?
So basically, it started in August. Of course, in March and April, it was really shut down, right? So when in August we went to a more open quarantine, we started some domestic pickup. We started to see some increase in domestic pickup, and then from then on, I think it only went down around August when it became a little more strict. Remember that, and then towards September, and even now we're seeing great recovery, positive outlook, even for the end of the quarter 4. So we see quarter 4 really as a starting point for the recovery of RedDoorz, and I believe also for the whole travel industry, especially after hearing that now government is allowing 100% operations for all hotels. I think this will just really get better and better. If you remember, during the pandemic, there was a surge and there was a revenge travel that happened after the pandemic. So, and I think it happens in all pandemics, the pent up demand, right, during the lockdowns. And I think you guys
Exactly.
also would want to travel, right? So there
Absolutely,
you
and
go.
hoping for that to be easier and also more affordable. Now, I
Yeah.
just want to throw a question on this hygiene pass to Doc. Sir, Doc, there has always been friction between the healthcare practitioners versus the economic side of things and the business practitioners when it comes to opening things. Can you, with confidence, say that with this hygiene pass or with the health safety protocols we have now put in place after more than 6 months of a lockdown already, we are finally ready to reopen the economy at this level?
I think that friction is fiction. There's really no dichotomy between the economy and health. And we need the economy in order to improve the people's health, and we need healthy people in order to invigorate our economy. And that's why these efforts by RedDoorz through the Hygiene Pass certificate. This is just an example of how we can actually strike a balance between the economy, reviving the tourism industry, encouraging people to actually book more accommodation in the weeks and months to come, but also ensuring that health and safety are promoted and protected. And that's why in the Hygiene Pass certificate, we have stringent requirements, requirements that were not even existing before this pandemic began. Now we have temperature checks, regular temperature checks for hotel staff, sanitizers and signages available all around. Even information being collected about customers so that we can easily do contact tracing if ever we end up finding someone who's positive. Hopefully not. And so these are just some of the measures that Hygiene Pass is requiring from the hotels that it certifies, so that again we can boost again our economy, our tourism industry, but at the same time ensure the safety and well-being of our, not just of our tourists, but also of our staff as well.
Miguel, what is the reception of the industry to this hygiene pass? Of course, as travelers, we want that safety in place. But as operators, this is much more, this is an added cost that, as Doctor mentioned, was never there before. Is this a temporary thing that you're envisioning during the pandemic and then it's not going to be there anymore? These requirements. Is this a long-term thing that hotels can actually sustain, especially as people's pockets are being burned, especially with unemployment and a lot of discretionary expenses going out?
Well, yeah, I mean, we've been talking about the new normal. All of us were affected in many ways because of the pandemic. Travel right now, their main priority is not only price and the comfort of the stay, but more importantly, the sanitation of the hotel. I believe the owners are embracing it because the local hotel owners, independently owned ones, who actually, not unlike the big chains, do not have the leadership or the guidelines or the expertise, to combat this. But they understand the market now is looking for safe and sanitized accommodations before anything else. So this is a must. And actually, they're actually positive about it because it's helping them run their business in a safe manner. So far it's been positive, and we plan from 100 hotels to more than 200 hotels by the end of the year to be part of this program.
All right, so definitely lots of things you're looking forward to by year end. But one other thing, of course, that's driving optimism when it comes to domestic tourism or the implementation of tourism bubbles here. Any area in particular that RedDoorz is optimistic about? Any market presence here that you are actually hoping that would somehow drive as well the performance of RedDoorz for the rest of the year?
Definitely, we have 7,107 islands, and even the RedDoorz as a company sees the Philippines as a leader amongst the countries that they operate in, no? Mainly because of the various facets and offerings that we can give to the traveler. So I still have more room to grow in terms of wiring hotel. We predominantly have more Metro Manila hotels and some in Luzon and Visayas and Mindanao, but we still have room to grow for Boracay, for Baguio, for Cebu, even Palawan and Davao. So which are destinations that are opening up soon, right? Actually have opened, and we believe that we move forward to the new normal. We can actually talk to, especially the budget and independently owned ones, to be operated by us, them boost their revenues. So yes, still a lot of room to grow. We plan to double the number of hotels we currently have by end of the year, next year in 2021.
Doc, I just wanted to follow up on what Sir Miguel said. Are these, these quarantine passes, yes, these sort of things, these health protocols, hygiene pass certification program, are these things you envision to be temporary or short term? Or are these, as you mentioned, the new normal that really needs to be implemented every time you now have a new hotel, you now have a budget hotel in place? And is this something that is happening in other parts of the world?
I think there will be appetite for keeping a lot of these good, healthy practices, not just in the hotel industry, but in every sector in society. You know, the way we even go to restaurants, the way we deliver healthcare, the way we travel. And primarily because I think we are building now a generation of citizens and travelers who are more health conscious than ever before. They probably will be thinking about their safety and security first before even booking that hotel or getting the cheap flight online. I think. And that's why hotels and the accommodation sector and the tourism sector at large will now need to begin thinking like a health sector. Are places safe? Not just the destinations, but is the whole cycle of travel. The whole travel journey. Is it safe for our citizens, for our tourists, both even foreigners who come here? And so there's a lot of what I call healthization, that is happening now. Everyone's health conscious. I don't think there's no turning back.
And given that, Miguel, do you think that this is going to be primarily something that they're going to put in place even post-pandemic? And how is this going to factor in on your future expansion plans?
Definitely, with or without COVID, a guest stay should not only be comfortable and memorable, it should be safe. So safety is always should and always be a priority, and all the more because of the pandemic. And moving forward, as we avoid and minimize safety risks for our customers, we need to factor.
Maybe one last question I have for Doc. What's your advice for travelers these days, Doc? I mean, of course, we have
For Danny, to be exact.
For us, to be exact. Are you saying, guys, go na, be confident, invest in the economy, basically, and try to adjust to the new normal? What is your practitioner healthcare advice to reassure people basically during this period that it's actually safe to start traveling?
Great. And the good news is it seems that the intense lockdowns that we've undergone in the past few months are already reaping the benefits. The curve has already peaked. It's slightly going down. Let's not be too excited right away because as mentioned by Miguel, we're seeing now revenge travelers, and that might lead to another second spike sooner than later. We probably will not have a good Christmas if that happens. And so my encouragement to our travelers and to citizens at large, it takes two to tango. We demand government and and the industry to do their share, and RedDoorz and Hygiene Pass are definitely doing its best in order to protect your safety, but also to citizens and travelers. We also have a responsibility. And so let's not forget universal wearing of masks, social distancing, which is more accurately called physically distancing, hand washing, cough etiquette. If we all just do this basic stuff, we're not thinking of highly technologically advanced measures, we will already be preventing COVID even up to 90 to 95%. So, that's high level of protection, and it's within our hands.
All right, so it may not be such a bad idea to actually book that flight and that accommodation. Dan. Thank you very much, Miguel Capistrano, Country Manager of RedDoorz Philippines, and Dr. Renz Guinto, RedDoorz Philippines Consultant for Hygiene Pass. Thank you, guys.
Thank you.
Thank you.
And that's a first look into the business day this Monday, October 5, 2020. I'm Jess De Los Santos.
Catch us again tomorrow morning, 9:30 a.m. I'm Danny Laurel. We are One News.
John, patawag si Jella. Sino mauna pa?